Yes, we are in an altcoin season, and yes, everything is going up. But Yearn Finance, the YFI token, is going up much more than the rest. Within 1 week, the price more than doubled. And the big question is, why did it double? What's behind all of this? The number of active addresses is fluctuating a bit. It's not necessarily growing. The number of tokens that are circulating is growing, but not by much. 6.8% in the last 12 months. We are pretty much done with all the token inflation. The supply is leveling out. So what is it? Did the platform find a perfect product market fit? Well, there is some adoption. 115 million of wrapped Ethereum deposited here, 23 million of DAI, 22 million of staked CRV. But how did those numbers develop over time? Let's have a look at a platform called DeFi Llama. DeFi Llama is tracking how much capital is locked up in a decentralized finance protocol, and it measures this over time. And this here is the chart for Yearn Finance. At one point we had been at 7 billion, and now all the liquidity pools combined is 332 million. So we went down by more than 95% in total value locked. Now, of course, the whole crypto ecosystem went down, but if we don't measure this in US dollars, but instead in Ethereum, this chart looks exactly the same. No difference here. Yearn Finance is shrinking very, very constantly. And of course, this is also reflected in the socials. Here, the number of Telegram users rather going down. Now, I don't expect every decentralized finance protocol to grow during a bear market. It's fine for a DeFi protocol to shrink temporarily, as long as the development continues, as long as the product is being built and there can be new excitement about those new products in the future. But here's the problem. This is the GitHub repository of Yearn Finance. So this tracks how many code changes have been made to the protocol in the past. And the last change we have seen was 2 years ago. A lot of the files haven't even changed in the last 3 years. The team seems to have abandoned the project altogether, and people really don't care about Yearn Finance anymore. When you go to June Analytics, where people make dashboards on how usage of different protocols is developing, when you look at that and you search for Yearn Finance and you open several dashboards, which by the way are also relatively old, last update 1 year ago, 2 years ago, you can see people aren't even updating those dashboards anymore. The queries don't run anymore. There's not even maintenance done. The people that were once invested in the project, they moved on entirely. Now, when dealing with altcoins, you always want to look at relative performance to Bitcoin or to Ethereum, because when you get into an altcoin, you take on more risk than by buying just Bitcoin or Ethereum. And also, whenever Bitcoin goes up, then the altcoins go up and vice versa. In other words, you want to know relative performance to see what are the idiosyncratic movements of that particular asset. So is that asset, for example, not going up one day when Bitcoin is going up? And is it maybe going down more than Bitcoin or Ethereum when there are bearish times? So the question is really relative performance. And so what we have over here is the long-term performance of the YFI token relative to Ethereum. And at the beginning, this was doing very well when the total value locked of Yearn Finance was in the billions. But then the performance versus ETH was very, very poor, minus 97%. And here is the recent rally. Where is this rally coming from, given that there is no development, no adoption, no progress? I have my very strong suspicion that we are looking at market manipulation by the centralized exchanges here. And here's why. Look at CoinGecko in the Markets tab at Perpetuals. There was $201 million worth of trading volume in the last 24 hours on Binance, on an asset that has a market cap of 346 million. So more than half of the market cap moved in the last 24 hours on Binance alone. If you add all of those numbers up here, you get to a value much bigger than the market cap. So the centralized exchanges make a lot of fees with their derivatives contracts when they manipulate the price that much, when they create so much volatility, because a lot of people want to bet on a direction, especially when price movements don't make fundamental sense, right? You want to bet on falling prices when there's suddenly a price pump that's not justified. And yes, I do believe that the price of YFI is going to come down at some point. Maybe not today, maybe not tomorrow, but at some point this price manipulation will resolve itself. But it's important to understand that the price movements are in the hands of the whales. They can manipulate it higher and higher for a quite prolonged period of time. We have seen this for many, many weeks, even in the TRB, in the Teller token. If the masses jump here on a short position, if the masses here bet on falling prices, then the whales simply buy up more of the token and take all of those financing fees. Because as people short the token and have to pay the longs for shorting that token, financing becomes expensive. The most important thing in situations like this is not to do the thing that most others are doing. If most people are betting on falling prices, you don't want to do this. If most people bet on further rising prices, you also don't want to do this. You want to do exactly that, what the minority is doing. Because the whales are very likely going to manipulate the prices in the exact opposite direction of what most people are doing. Feel free to subscribe in case you haven't yet. I publish videos here regularly. There's also a Telegram, link is down below.